It is going to $1 million a coin. Regardless, it doesn't matter. It literally doesn't matter. You look at these power laws and stuff, and the future does seem to be very consistent with the past, right? There's definite patterns here. This does not look like a random walk. I've never seen data like this in my life before, okay? And I've looked at tons and tons and tons of data, for stock prices, bond prices, commodity prices. I've studied all these things. I've never seen a power law like Bitcoin. This is very, very unusual, right? I think the thing about Bitcoin is your generation is not going to see another one of these things that easily. You wait another 10 years, you're 36, you may not see that opportunity again. You know what I mean? Like in your entire life. It's a make or break moment, right? Because if they make the wrong move, that's it. They're done.
Today's interview is with entrepreneur, investor, and mathematician Fred Krueger. Fred Krueger is a Bitcoiner who has been exploding in popularity this year. Fred not only worked on Wall Street for almost a decade, but he's also an extremely successful entrepreneur. He has built and exited 10 separate companies, with some of the exits being in the tens of millions of dollars. On top of this, Fred has a degree in mathematics and a PhD from Stanford University. These days, Fred spends all of his time on what he thinks is the greatest investment opportunity of our lifetime, Bitcoin. Fred is a big advocate of the Bitcoin power law model, a pricing model that forecasts Bitcoin's future price as if it were bound by the laws of physics. The Bitcoin power law model predicts that we'll see Bitcoin hit a cycle peak of between $200,000 and $250,000 by the middle to end of 2025. It then predicts we'll see Bitcoin hit $1 million per coin by 2032. Then, if the model is accurate, it predicts the Bitcoin price will go up by a factor of 64 over the next 15 years. This would put the price on one Bitcoin at $4.5 million. In this interview with Fred, we break down why the Bitcoin power law model is so impressive, why Bitcoin to 1 million per coin is inevitable, and finally, why Bitcoin is the greatest investment opportunity of our lifetime. Make sure to stick around until the end of the video, where Fred also drops some gems on how to succeed as an entrepreneur and an investor. Also, if you like what Fred has to say, be sure to follow him on Twitter and YouTube. His links are in the description. But without further ado, let's jump in with Fred Krueger. Fred, thank you for joining us. How are you going today?
Thanks. I'm doing great. Thank you. Always happy to talk about Bitcoin.
Fantastic. Same. Now, let's jump into it. Fred, I think a big reason you have exploded in popularity in the crypto space is because of your diverse background. Not only do you have a PhD in math, you also have experience on Wall Street, and you're also an extremely successful entrepreneur. For those who are perhaps new to you and this is their first time seeing you, could you just tell us about your background in maths, your time on Wall Street, and your experience with the various companies that you've founded?
Sure. So I studied math in college, and then I went to Stanford, got my PhD, and then after that I went to Wall Street. I was one of the first kind of quants on Wall Street, really. Trading, and at the time, the two largest firms on Wall Street were Salomon Brothers and Goldman Sachs. Now, Goldman Sachs is still huge. Salomon Brothers, unfortunately, is no more. It got absorbed into Citicorp. We had a big treasury bond scandal. It kind of took down the firm, basically. But it was really the peak of Wall Street, and I was on the ARB trading desk there. So. Used a lot of my math and quantitative models, and it was kind of the Wild West of bond trading back then. So I left in 1992, and I got into startups. There was almost nobody doing startups in 92. I mean, literally, maybe there was 50 people in the world, that really had kind of 10-person startups, you know what I mean, or more. Like, there wasn't much. And, we'd know everybody. So, there was the guy doing the 3D, there was the guy doing the calendar, I was doing a paint software with my brother. And so, we basically decided to build a paint software on Windows, which was a new platform at the time. Windows 3.1 had just come out. And so we built this for one of the first paint programs, and it became very successful. And we ended up selling the company to Macromedia, which then got merged in with Adobe later on. But if you've used Adobe Photoshop, presumably?
Yes, all the time.
Okay.
All the time.
Okay, so the concept of layers in Adobe Photoshop?
Yes.
That was my invention.
That was you. Okay, I use that pretty much every day.
So literally, yeah, and it kind of co-invented by me and another guy named Alvy Ray Smith, who was also the founder of Pixar, right?
Okay.
And so Alvy Ray and my brother and I both showed up at this conference together, and we were both demoing these things. We didn't call them layers, we called them objects, but it was basically floating objects in a raster-based program. And his company was bought by Microsoft, and my company was bought by Macromedia, which were two large. Macromedia was a huge software company at the time in San Francisco, and that was sort of my beginning in tech, right? So I sold this company for about $20 million, and we had no VC. It was just, it was a profitable company. We produced shrink wrap software that we sold in diskettes, and it was great. And so you do one company in my early 30s, right? And I made a bunch of money. What are you going to do? You're going to do another company. You're going to do another company. You're going to do another company. And then the internet came along, right? And I got involved in games. And I built the largest standalone gaming company on the internet in 2000, in 99, 2000. It's called iWin. And we had 30 million users, and we sold that company for, about $70 million to a publicly traded company called Vivendi Universal, right? It was a French company, a French media conglomerate. And so, I've done a lot of different companies. So different ad tech companies and a domain name company that I sold to GoDaddy. So I've been involved in a lot of non-crypto stuff. That was my background. And then I kind of got involved in, crypto really in about, I bought some Bitcoin really early, sold it, was not interested in it, didn't think, like everybody else, I thought it was sort of like, okay, this is like the MySpace. There'll be Facebook or something else afterwards. It won't last, interesting, but yeah.
And what year was this that you first were introduced to Bitcoin? Oh, okay, so you were very early.
Yeah, I mean, I knew a lot of people who were, I'm friends with this guy, Brock, who was chairman of the Bitcoin Foundation, was trying to pitch me really hard in 2013, 2012. I didn't buy it back then. I had sort of a little bit, I had a little interest in it, but not really. I just didn't seem real to me. And I really got it in 2019. And so, I would say 2019, 2020, 2021, I just become your conviction gets better and better and better as and so I just became, I would say obsessed with it, so I would say I'm completely obsessed with it at this point, and not only from the point of view of making money, you know what I mean? I'm obsessed with it as a significant, economic, cultural phenomena, just like, even more so than the internet, right? So I was there before the internet, before mobile phones, that saw the impact of those things. I think this is going to be more severe, more impactful, right? I think the fact that we're going to this kind of neutral, non-money, anyway, so that's sort of my background, right? And so, I wasn't like a big loud person on the internet, and I had really no interest in Twitter or anything. And I just made one video in December of last year when these ETFs sort of were kind of, people were saying these ETFs are coming, and I got really excited, and I said, okay, I think this ETF is really going to be the critical thing that's going to make this thing work. And so I made this video, and I was like, guys, I understand the Bitcoiners. I understand Bitcoin. I also understand finance, right? And I'm like, neither of you guys understand the combination of these two things together, how great it is, right? And I was sort of like, Bitcoiners were like, yeah, but it's not real Bitcoin. They're holding it for you. And I'm like, yeah, don't worry about that, And then the finance guys were like, well, so what? It's just another ETF. And I'm like, we do an ETF a day. And I'm like, no, guys, this is different. You have no idea what you're about to, what will be unlocked. And so, that was my story on sort of online. And, and I kind of sort of, once the ETF was sort of approved, I was sort of like, well, okay, maybe that's it. Mission done. But then I was like, you know what? I kind of enjoy not being at the center of attention, but getting all this access to all these smart people, and I love the ability to, get feedback and talk to people, like, pick up the phones, have all these people come to say, hey, Fred, I'd like to talk to you, and that's great. That's not something you can buy, and so I'm really interested in Bitcoin, and now I've written a book about Bitcoin, and I'm just, I'm interested in participating as much as I can in the Bitcoin, in the journey that's going to be Bitcoin for the next 10 years. So, I'm happy to be a participant in that.
Fantastic. Yeah, I think I first started following your account maybe January, February this year, and it was when you were talking about the ETFs. And I think you're one of the fastest growing accounts in the Bitcoin space or the crypto space. And it was first about the ETFs, and then it was the Bitcoin power law model, which I know Giovanni discovered, but I think you've done a big job in making it more popular.
I want to say that I discovered Giovanni.
Yeah.
Okay, so, this is sort of an independent thing. And my journey there was, I'm friends with this guy, Stephen Perrineau, who's an astrophysicist, and we both know a common friend at Sun Microsystems, Shaheen Khan. And so I've been following Stephen for a long time, and Stephen has always had this sort of power law model, and I was like, oh, this is kind of, then I really got into his model, and I was like, this is amazing, Stephen. He's like, yeah, it's amazing. And I'm like, and I sort of posted that, and then Giovanni's like, hey, this is my model. Like, no, I discovered this. And I'm like, who are you? And then he's like, I'm Giovanni. And I'm like, okay, let's talk, man. You're a professor of astrophysics, so is Stephen, and I understand math better, as much as the next guy. So I really love talking to people who are quantitative, like Giovanni or Stephen or Sins or something, because I'm really happy to go in the weeds, with them, and I do all the checking myself, So I immediately, when I heard this, I'm like, okay, let me pull all the data myself. Okay, great. Let me check it myself. I'm like, oh my God, yeah, you're right. This is completely, this is okay. What if I did this way? Oh, this is, this way. What if I check? What is this? So, and I think that's the beauty of all this stuff, is that you can test it yourself, right? You don't have to use statistical software. So you can do it on a Google Sheets, and you can verify yourself. And I think if you do that, I think you get a real sense of conviction that something's going on there, right? There's something special going on,
And I do want to dive deep into the power law model, because I think you are one of the best people to speak to. And Giovanni we actually interviewed him. He was the second or third person we interviewed on the channel. And in the interview, he was, before we were talking about it, and we were talking a bit afterwards, and you were one of the people that he wanted to connect with, because he saw that you had a background in math, and you're probably one of the few people that could actually understand. Like, I don't have a background in math, so I can talk to him, but I don't understand on the same level the concepts that he's explaining. Before we get a bit deeper into that, I do want to get your opinion on where we are in Bitcoin today. So we did see the ETFs approved. They smashed pretty much every record they could have. Then we had the halving, but over the last 2 months, the price action, it's been a bit choppy. The ETFs, the inflows have slowed down a bit. What is your sort of outlook on Bitcoin right at this moment?
I think it's kind of exactly where you think it should be, right? Like, I think it's, well, first of all, kind of one of the things we know about Bitcoin, right, is Bitcoin does a lot of nothing most of the time, and then it moves very suddenly, right? So, there's that sort of meme of the guy with the stick poking Bitcoin. It's like, do something, do something, do something,
Yes.
right? And there's a little bit of that. That's always the case with Bitcoin, right? There's this thing. It's like, and I remember visiting my dad, who's in New York, and I convinced him to get in Bitcoin, and it was like June of last year, right? And Bitcoin was trading at 25,000, and he's like, Fred, I'm really getting, quite frankly, a little disappointed, and I'm like, no, I'm like, Dad, no. And he goes, it's just sitting here at 25,000. I'm like, Dad, I said, like, just, it's great. Just do not worry. This thing is going to do great, and don't even think about selling your Bitcoin, He didn't sell it, but, I do think we're just, a 3-month period of chopping around is 100% normal. It doesn't matter. It's like, it completely normal. So I don't think anything of what we're in right now. I have no opinion whatsoever. And in general, one thing I've realized is I have no opinion on what Bitcoin's going to do over the next month. Zero. I sort of said, I like to look at I'm like a monkey like everybody else. I click, refresh, 50 times a day. But realistically, do I have any idea what Bitcoin's going to do tomorrow? No. Do I have any idea what Bitcoin's going to do next month? No. Do I even have any idea what Bitcoin's going to do next year? I think a little bit. In the next year, probably a little bit. But, over the next 2 to 4 to 5 years, yeah, I think I have a pretty good opinion there, right? And I think the power law helps quantify that a little bit, but look, we do not have magic wands as just to see where this stuff's going. We really don't. And I think as a guy who was, trading professionally for years, I will say Bitcoin is even more inscrutable than almost any other thing I've traded. It goes up exactly when you don't expect it to go up. Like when you're completely convinced it's going down, that's when it's going to go up. Or when you're completely convinced that it should be going up, then it's going to go down, or it's going to stay sideways. So, it's really, really hard to predict Bitcoin. And I think, part of the growth pattern here of being a Bitcoiner is understanding that, right? It's understanding you will not have the ability to predict this thing. So if you're sitting there trying to trade this thing, leverage long or anything, I really don't think you're doing yourself a favor by trying to predict it. I don't think you're going to be successful, and I don't think that's a great way to make money. That's my opinion.
No, that's a great answer. And your answer actually reminded me, it's one of your videos I watched. You had done an analysis on the previous bull cycles, and the overall conclusion was that, exactly as you said, Bitcoin doesn't do anything for ages. Then it all happens in a very concentrated period of 3 months or something. And if you're out of the market during that 3 months, you've missed the lion's share of the gains.
Yeah. So let's look at those 3 cycles, right? So and part of this, I'm writing this book on Bitcoin. So I went over each of these patterns, right? So if you go over the 2013 pattern, right? Most of the action in the 2013 bull market, right, was from October 2013 to December 2013, right? That was where, you could have been out of Bitcoin completely, okay, up until September, October, and then you would have made 85% of all of Bitcoin's appreciation just by being there those 3 months. I mean, you literally could have sat out the first 3.5 years of Bitcoin. You could have. You just show up in September 2013, buy Bitcoin, and if you got out in January of 2014, you would have captured 85% of the value of Bitcoin, right? Next bull market, right? 2017. Again, and that one I remember very well, right? But 2017, it went up, it started the year at 1,000, but then it really never got much below 6,000 for most of the year, okay? And then at the very end of the year, it suddenly broke 10,000. I want to say it was, just without looking, I want to say it was like September, October again. And then it, or maybe it was even later. And then finally it broke through and it hit almost 20,000. But that move from 10 to 20, actually that move was only 1 month.
Crazy.
So really, really this thing happened in just the end of 2017. And then the other big move was in, the other big move was in 2020, early 2021, right? And again, that was really October of 2020 to January of 2021. And then and again, after those 3 months, it's over. People talk about these cycles, but it's not capturing the cycle. It's capturing the bull market during the cycle, right? Like, so if you're out, let's just say you're out. Let's just say in 2020, you were not convinced that Bitcoin was a good deal, right? And let's say you missed 2 months out of the 3 months of that thing. Well, you're not going to, instead of getting involved at 10,000, you were going to get involved at 45,000. Just literally by missing 30 days, right? and then you're going to be like, well, okay, got involved at 45,000, went to 60,000. I made a little bit of money. So my point is, you have to be so careful, because the danger here is if you're out, if you miss those critical moments, you actually will have negative return. Holding Bitcoin could be a negative return thing. So you have to, and that's even before taxes. So it's so dangerous to try to time this thing that you really, really should not do that. And so that's what I think just looking at this data very carefully tells you. Now, of course, you don't 100% know, is the future going to repeat the past? But you look at these power laws and stuff, and the future does seem to be very consistent with the past, right? There's definite patterns here. This does not look like a random walk. This looks like there is a very clear pattern here. And people say, well, Fred, this is just drawing lines in a graph. And I'm like, no, it is not. Like, this is something that is, I've never seen data like this in my life before. Okay. And I've looked at tons and tons and tons of data, for stock prices, bond prices, commodity prices. I've studied all these things. I've never seen a power law like Bitcoin. This is very, very unusual, right?
Yeah, let's jump into the Bitcoin power law model.
Sure.
For anyone that hasn't seen our interview with Giovanni, I'll give them a quick rundown. But Giovanni Santastasi, he's an Italian mathematician, and back in 2019, he posted on Reddit that he had seen this relationship that Bitcoin was following a power law. And back in 2019, no one really paid attention. It kind of got swept under the rug. And the big pricing model that gained a huge amount of popularity was actually Plan B's pricing model. And no one really took notice of the power law model. But then he posted an update at the beginning of this year, I think, or maybe the end of last year. It was 5 years after. And Bitcoin has still followed this power law model. And then you discovered it, and you've really helped them popularize it. And it's sort of gaining momentum now. So can you give a brief explanation on what the Bitcoin power law model is and why it's so significant to see a relationship like that? As you were saying, it's so rare to see. You haven't seen it before.
The first thing is, let's step back and say, if you look at Bitcoin price on a regular basis, right, and you're graphing time in years, and you're graphing the price in dollars, right, it's really hard to see a pattern there, right? Because you look at this graph and it looks like, okay, well, we had this big run in 2017, then we crashed. Then we had this other big run in 2020, then we crashed. Now we're back. I mean, where's the pattern here? It doesn't look like there's a pattern, right? Now, if you look at it and you say, well, I'm going to put the time in years since the beginning, and then I'm going to put the log of the Bitcoin price, you see more of a pattern. Now you see it's sort of arcing, and it looks like it sort of looks like, okay, it's going up according to this curve. Okay, there's sort of a curve here. Okay, that's kind of interesting. And then you say, well, wait a second. Now let's look at the time on a logarithmic basis and the price on a logarithmic basis. So you look at both on a log basis. Now the curve just jumps out at you and you see, oh, okay, this is a line, And not only it's a line, but it's very sort of spread out. There's a deviation on this line. It's very tightly bound according to this line, right? So you have, the correlation coefficient, right, which is sort of the fit of the data to the line, turns out to be like 96%. So you're like, holy, how is that possible, right? Now, if you saw this over, 1 or 2 orders of magnitude, like a difference between 1 and 100, you'd say, okay, I can kind of understand that, right? But this is data that's over 15 years and spans data that goes from 10 cents to almost $100,000, right? So you have, 6 or 7 orders of magnitude, right, of data. And, over this 1 million X difference, right, 10 to the 6, you have a very linear relationship. And you just do not see that, okay? You do not, that is the crazy thing. You don't see it. Now, you do sort of see this in physics and stuff, and that's probably why Giovanni saw it, right? Because if you're looking at astrophysics, which is you're measuring data in like light years, right? And you're saying, okay, the size of the Milky Way is, 100,000 light years away, right? And then the size of the universe is, 14 billion light years across, right? And then you're looking at a distance between, you and me that might be, a couple thousand kilometers, right? If you're going to do that, you have to look at everything in log terms, right? You have to look at time in log terms because there's billions of years that have elapsed, and you have to look at distance in terms of log terms, right? You can't, otherwise you're going to miss stuff. So the way of looking at the world in log terms is really, it's a normal thing for a physicist, right? Or especially for an astrophysicist. So I think that's why Giovanni, sort of saw this. And, I think that other people would have seen it, but, physicists typically aren't that interested in Bitcoin. And so, I think, and I think there's a confusion that a lot of people have of thinking that these things are exponential, right? And so, and this is kind of a normal confusion because, there's a lot of exponential things that happen in the world, right? Growth is exponential. So if something's growing at 3% a year, that's exponential growth. That's what we mean by exponential. It means constant growth, right? And so, it sort of looks like the growth is exponential, right? But it's not quite exponential, right? And Giovanni explains this and stuff, but the stock to flow model, the Plan B model, is sort of an exponential model, right? And that's one of its flaws, right? Because it is not the case, and this is partly, I don't want to try to attack this thing too much, but if you start with the idea that every time that we get a halving, right, that the price should double over a halving. Let's just say that was the case, right? That's an intuitively appealing concept, right? Because you're like, okay, there's half as much new supply, therefore the price should double. Well, okay, so that's sort of like doubling the grains of sand on a chessboard, right? And what we know what that leads to, right? Which is, after the last thing on the thing, you have, more sand, more grains of sand than the weight of the earth or something, right? Because this exponential just grows. And the power law grows fast initially, but then tapers down. So I think, one of the things that I've really tried to do is try to explain it in simple terms that people can understand. And I think the best way to explain what a power law means now is kind of like Bitcoin's growing at about 40% per year. That's the trend line, right? But it could go negative. It could, obviously it did in 2022, right? But in log space, it's growing at 40%. It's growing at 40% compounded rate, right? So the slope is that. But in 10 years, it's going to slow down. It's going to only grow at 30%. In 20 years, it's going to grow at 20%, right? In 30 years, we're going to be down to 10% growth, right? So we're in this, and back in 2017, we're almost at 100% growth, right? So the growth rate is slowing down in terms of percentages. It's not slowing down massively. I mean, 40% is still enormous, right? It's an amazing growth rate, but it's not what it was in 2017. So it's sort of, think about this as sort of slowing growth, and also the volatility around the growth seems to be slowing as well.
Hey guys, I hope you're enjoying the interview so far. I just wanted to let you know, if you want to stay most up to date on the crypto and Bitcoin world, make sure to subscribe to our daily 5-minute crypto newsletter, The Crypto Nutshell. It's a daily email that gives you the top expert predictions, any breaking news, and top on-chain analysis, all in a nutshell. We write it up every single day and send it to you for completely free. All you have to do is click the first link in the description, enter your email, and you'll get our email into your inbox every morning, completely free. It'll make you a better crypto investor in 2024 and will make sure you stay on top of all the news in the space. But for now, back to the interview. That's interesting that you say that, because and I watch a lot of Michael Saylor keynotes and his interviews, and big key point that he keeps making is that we've just entered Bitcoin's gold rush period of the next 10 years, and he suspects over the next 10 years we'll see 40% growth per year. So, and I know he has a background from MIT in, I don't know if it's physics or aeronautical engineering or something, but I don't know if he's seen that relationship. Yeah, something like that. I don't know if he's seen that relationship or looked into the power law model, but that's interesting that you both come to the same conclusion. Two things I just want to stress for someone that isn't as well versed in math, who doesn't have a PhD. So the major differences between the stock to flow model and the power law model is stock to flow is exponential, which means it's just going to infinity essentially. But power law, it's not an exponential. You get this period of fast growth and then it levels off over time. That's a main difference between the two models.
Yeah. So in terms of just like very simple math, right? It's sort of like t to the power 6 is a power law, right? So time to the power 6 is the power law. 6 to the power t is exponential.
Yeah. Okay.
Right? So it depends where that t is. Is it in the exponent, or is it in the other part of the thing? So if it's, and so x squared, t squared, okay, that's a parabola. That's a power law, right? Parabolic. T to the 6 is faster growth than parabolic. 2 to the power t is exponential. You know what I mean? So that's fundamentally the difference. And look, these are not, over the period of 10 years where the stock to flow data was really kind of sourced, it's not completely 100% obvious that it was not exponential, but it was a power law. But these things start deviating, and they're starting to deviate right now.
Yeah.
So if you look at, for example, what stock to flow predicted, where we would be right now today, they would say, okay, right now we should be at, 500,000.
500,000? Yeah.
Yeah, exactly. Yeah. You know what I mean? So the problem is these things are pretty close initially, but because of the deviation, they can get off track pretty well. And I think this is sort of the problem the power law, the stock to flow did, is a lot of people have just gotten like all models are bad. And I understand that because, look, I remember when stock to flow thing came out, and I was sort of vaguely, I gave it about 10 minutes. I was like, oh, that's interesting. Looks a little shady, but I couldn't really put my finger on what I didn't like about it, but I didn't love it. You know what I mean? But I was just looking at it and going, okay, well, he claims it has this R squared, okay. And then there's this sort of argument of scarcity. And, you know, you can cook up models like this if you're careful, and you have to be very, very careful. The thing about the power law model, which I like, is it really is just a simple statistical description of what the Bitcoin price has done. It's not like you're taking these happenings, you know, you're taking this data, you're moving it from exponential into, it's sort of what it really is doing is sort of like he's taking this data and then he's translating, he's taking logs of it afterwards. So I don't want to get into it too much, but it probably hurt a little bit the general perception of models. And, you know, and I think, and I just want to caution people too, that look, no model is perfect, right? You know, I'm probably a little less sanguine than Giovanni is about these models that, you know, I think this power law it's a great starting point to get pretty bullish on Bitcoin, but I wouldn't try to read into it too much. Like I wouldn't try to say, you know, okay, great. And now we should be tweaking, adding a little bit because, you know, this ratio of this over the power law. Like, I don't think this is precise enough for that, right? I think the only thing the power law should do to you is convince you that Bitcoin probably is going to go much higher in the next 10 years. And that's it. Yeah. Just stop there, you know, stop there. And you know, how much higher? Well, I don't know. It could be 5x. It could be 10x. It might be more. Who knows? You know, it might be 20x. But if something's going up 5x in the next 10 years, you want to buy that thing, you know, and, you know, you don't really need to like sit there and yell at people because you think it's going to go up 10x and they think it's only going to go up 5x, or they think it's going to go, I don't care. Like these models are not that precise. We don't know. Bad things can happen. Who knows? You know, these are not precise tools, you know, but it is pretty interesting. And I think it's a pretty good reason to be long Bitcoin. I think as part of one of your reasons in your conviction arsenal, you know.
No, fantastic. And great disclaimer. And just to finish up on the power law, I just want to stress one last point that you were saying before. The reason that you found the power law model so fascinating compared to stock to flow is that it's so rare to observe these. Like you observe them I know they're in, like you see them in biology and in physics, like they're something about orbits or planets, but you don't see these in financial assets. That's correct, right? Like it's so rare to see this relationship.
Yeah, you don't, look, not only you don't see in how many financial assets do you know that's gone up 1 million times? Right.
Again,
now, people have said, well, if you got involved in the seed round of Google as a private investor, you would have made 1 million times your money. Okay. That is true. But, you know, this is an asset that anybody could have bought. Okay. Anybody could have bought this thing in 2011. Okay. 2012. Okay. 2010. It has gone up 1 million times since that price, since that pizza incident in 2010. Like, a lot of people were mining Bitcoin. You know, this is not like some special thing. You had to know Sergey Brin's girlfriend in order to, you know, get in on the private sale. No, this is like a generally traded asset that's gone up 1 million times. I don't think there is another asset that's gone up 1 million times, right? So, you know, people are like, well, how about Ethereum? Well, Ethereum didn't go up 1 million times. Ethereum went up 1,000 times, you know? So, yeah, it's okay. It's had a run, you know. People are like, Caspa's doing this, you know, this other token. I'm like, okay, but it's only been around for 3 years and it's only gone up 100 times, you know, like, they're like, but it's gone up 100 times. I'm like, right. But from a mathematical point of view, that's not that much. That's two orders of magnitude, right? Versus 6. You know, you're not in the same league. You can't, nobody challenges Bitcoin. Its track record is incredible at this point.
Fantastic. And just one final question on this power law, because there was one thing that kind of bothered me that after my interview with Giovanni, I guess, what is the reasoning behind, and I don't think anyone has an answer, but why is Bitcoin following the power law, or does it not even matter? Is the important thing that you see this relationship there and the actual reason why behind it? And it could be something to do with the way debt is created, the way new technology is adopted. Is it because it's like a virus type thing, the way it's spreading? Or like, what would be your explanation as to why it's so closely tracking this model, or does it not even matter?
Well, so some of the things don't matter, right? So, for example, the number of patents per user, the number of patents per capita in a city is a power law of the function of the size of the city. I mean, it turns out that it's true. It's like it goes to 1.2 times the size of the city. So if you're in bigger cities, they tend to produce more patents per user. I don't know why. Nobody knows why that relationship's 1.2. We don't know, right? It is, and there's a relationship that Giovanni mentioned, which is the as an animal grows in size, the amount of energy that it needs to survive, the metabolic rate, the energy measured in watts, goes down. It's a power law of 0.75. We don't know why it's 0.7. That's the number. Now, why is Bitcoin going up with the power law? And I think the reason is because adoption of Bitcoin is going up, right? And so that you can measure. What you can measure is the number of Bitcoin wallets, that hold, a million sats, the number of Bitcoin wallets that hold $1,000, the number of Bitcoin wallets that hold 1 Bitcoin. And all of those are power laws, right? So it's very clear to me that the number of people using Bitcoin or buying Bitcoin, holding Bitcoin, is growing like a weed. It's not growing quite as fast as the price of Bitcoin, which is normal, right? The price of Bitcoin should be growing faster than the number of people who own Bitcoin. But the number of people who own Bitcoin is growing like a power law. And why is that? Why is Bitcoin useful for all these people? Well, because it's a very secure way to hold money outside the system, outside the banking system, right? You can hold it outside the banking system. You can move it outside the banking system, and you can send it to anybody you want, anywhere in the world for very little, right? So it works, it works as a way to store, it's a new form of money. I think it's the new form of money, right? It's going to replace all other forms of money. And I really, I think Saylor probably knows that, but I don't think he can politically say that. But I will say it. I'd say Bitcoin's going to replace fiat. It's going to happen, right? It's the dollar, the yen, all this stuff's going to go, right? Because none of them can really fundamentally compete with Bitcoin. Now, if you're talking about replacing the dollar right now, it looks a little ridiculous, right? Because Bitcoin's just, $1 trillion, and there's hundreds of trillions of dollars of dollar assets and bonds and everything else, right? So it looks like a pipsqueak, trying to poke, taking a fight with the giant. But I think if you look at the trend, I think Bitcoin's going to replace the dollar. I think it's going to replace all forms of cryptocurrency, and things tend to a standard. We're gonna go to a standard. I think that standard is Bitcoin, and so I just think it's not going to happen anytime soon. It's probably going to happen somewhere in the 20 to 30 years from now. I hope to be around to kind of see that happen, but it's going to it'll be a good ride on its way, right? But I think that's where we're going fundamentally, and nothing's stopping this train. Nothing. It's unstoppable train.
Yes, I do want to speak on that a little bit, about it being an unstoppable train, because I think the biggest news over the last 2 weeks was we saw Donald Trump come out in the US in pretty much full support of Bitcoin and crypto, and has somewhat forced the Democrats to also take a more pro-crypto stance. Do you think that now that the ETFs have been approved and both political parties look like they're a lot more pro-crypto than maybe 12 months ago they were, do you think that pretty much all regulatory risk has now been removed from Bitcoin and there essentially is no existential risk anymore?
I don't think there has been existential risk for the last 10 years.
Okay.
I just think we don't look. We tend to get very emotional about this stuff, and we're like, yeah, go, liberalize it, do this. But look, at the end of the day, Bitcoin doesn't care. Bitcoin doesn't care. It doesn't care if there's a Democrat in the White House. It doesn't care if they're a Republican. It doesn't care if the Fed rate is 5% or the interest rate is 0%. I know, and it doesn't care who the SEC who makes it. It literally does not care. Okay, it is going to $1 million a coin, regardless. Regardless, it doesn't matter. It literally doesn't matter. Now, I know, like, as a person who follows finance and stuff, I'm like, yay, they're going to cut interest rates. Yay, we're going to liberalize this. But actually, I don't think it matters. I think that's, again, we have a belief that we can stop this thing. We can't stop this thing. This is like, this is something that is bigger than all of us. It's just an idea that's just so good and so perfect that it will triumph regardless. And you just look at this mathematical progress of the power law, and it's math. It's just like, it's sort of like they invented guns. It doesn't matter if they outlaw guns in certain countries. Everybody's going to go for guns, because they're better than swords. You know what I mean? And so this is a better technology. It's just going to work. And I think Satoshi knew this, right? When he once this thing was once the capstone was put in the first Genesis block. So I think Satoshi fundamentally knew that he cracked the problem, right? He's like, yep, I got the solution. This is going to work. We're not going to get this immediately, but it's going to catch on. And, Hal Finney kind of was like, very early, is like, yep, this thing could be worth $10 million a coin. Mm-hmm. Yep. Yeah. The future is kind of marked, right? So I feel like, I just don't think we have to help Bitcoin. I think we can evangelize it, just because we're excited about it. We like what it is. We like the problems that it's solving and everything else. And I think it's going to make us very rich if you commit to it. You know what I mean? If you commit to it, if you take, Jesus, take him as your Lord and Savior, I think you will do well, right? I think if you just sort of poke around the fences and, and play around and dabble in this and that coin, I don't think you're going to do so well. But I think if you embrace Bitcoin, I think you will do very well. And I think, I feel like my role here is a little bit like, Paul the Apostle. And not that I'm a religious guy, but I like these metaphors, But I'm like Paul the Apostle walking the earth, telling people, like, there's this new thing, called Christianity, and you should embrace it, and get eternal life, And I think Saylor's a little bit the same thing, at this point. I feel like he's just like, he feels like, oh, I've discovered, the promised land, and I must spread the word. So
fantastic. Very well said. And yeah, I love that analogy. I want to talk about embracing Bitcoin, and something that you've been talking a lot about recently on Twitter, and I've seen you speak about it a few times in videos, is your view on the opportunity of owning Bitcoin in the 2020s versus owning real estate in the 1980s. Just today, I saw you tweet out, buying a house was a smart thing to do in the 1980s. Buying Bitcoin is a smart thing to do in the 2020s. Now, I'm 26, about to turn 27, and a lot of my friends are they've either bought a house, they've putting a deposit on a house, and the number one complaint I hear all the time is that older generations got to buy houses multiples cheaper. I'd love to get your thoughts on the opportunity that people have today of buying Bitcoin versus a few generations ago in buying a house or buying property.
Well, look, I mean, nothing wrong about owning property. It's a great thing. I prefer to own where I live than to rent. This is no doubt, right? However, I would say buying a house at 7% interest when the houses have appreciated this far, locking yourself into just paying house payments and missing out on this opportunity of Bitcoin strikes me as an incredibly bad trade, right? Like, you are potentially making, you're not going to get, and I think the thing about Bitcoin is your generation is not going to see another one of these things that easily, you know. They may, I mean, there is going to be some amazing AI stuff coming, but it's not necessarily clear that you're going to be able to even invest in or participate in any way, right? It may, in fact, take your job, right? Like, you don't really know if AI is friendly or not, right? But I think, you have this opportunity. Bitcoin is like right here in front of you. It's a great opportunity right now. And my point is, you're not going to see, you wait another 10 years and you're 36, you're not going to see that. You may not see that opportunity again. You know what I mean? Like, in your entire life. So I definitely think this is a make or break moment for a lot of millennials and Gen Zs. It's a make or break moment, right? Because if they make the wrong move, that's it. They're done. You could basically be locking out, the best period of best years of your life to acquire any kind of wealth. If you haven't acquired some kind of wealth by the time you're 40, it's going to be tough. I mean, I hate to say it, but it's, it gets tough. You know what I mean? Time you're 50, forget it now. Like, you better have nailed it, because it's just, I mean, there are some examples. The guy who started McDonald's started in his 50s, right? But, in general, you kind of got to acquire wealth early. So I would say owning real estate right now is not a great way to acquire wealth. Was it a great way to do wealth? Even in the 80s, you would have been better off buying stocks. Okay. So, really what you should have done in the 80s is going long the stock market. Very few people did, right? It was a very similar to kind of where we are now with Bitcoin, because people always said stocks were overpriced back then. They were like, this is crazy PE, 12 PE. Oh, that's crazy. Like, why would I buy stocks at 12 PE? Well, because it was a great buy, right? Like, that was amazing, right? And hindsight's 2020. But I think, I really think right now real estate is if you really shouldn't look at it as an investment. You should look at it as a cost. It's going to cost you something to live. And, it's really how much cost do you want in your life versus how much savings do you want to do? I would recommend people save more, and I would recommend that they save in Bitcoin. I think that you're going to be better off saving in Bitcoin. Any analysis you do, you're going to be better off saving in Bitcoin as opposed to saving in your house. That's my opinion. I could be wrong, but I don't think I am. And I think, you kind of have to go, as Wayne Gretzky said, you have to go where don't skate where the puck is, skate where the puck's going, And so you got to be a little bit one step ahead of the game. And, real estate's for boomers like me, like, you don't need, you should be wherever you want to be, whether it's Budapest or Thailand or where, go rent where it's cheap. It's cheap somewhere to rent, right? There's always somewhere where you can rent cheap, right? And I'd say if I were your age, I would not maybe even move to place it. I'd be a little bit like you, just be a little bit of a nomad, but I would opportunistically look to live where I would look to live outside of major cities where it's cheap, and then I would look to do stuff online or remote work, right? And I would look to do that and save in Bitcoin. I think it's the simple That's the cheat sheet, for most people. It's not any more complicated than that. And the problem is, if you're living in San Francisco or New York City, right, you may work for a financial firm in New York City, or you may work for, a tech giant in San Francisco. But if you're spending all your money on rent, right, or, a parking garage for your car or whatever it is, right, that's not going to make you tons and tons of money right now. So I definitely think, this is a great time to be stacking sats, especially the next 5 years. I think, if you can delay things 5 years, delay things 5 years. And, I think that's in general it's a good, there's not always been this time. Like right now, I see this opportunity. If you go back to 2000, I would say, what are you going to do? Buy a house, that seems like a good place to put your money, Right now, I don't think it's a good place to put your money. I would stay away from real estate.
Great answer. And one point I want to touch on there is that you said Bitcoin is the type of opportunity you only get once in a lifetime or once in a generation, and say in 10 years, it's not going to be the same opportunity. Perhaps it'll be AI, but Bitcoin is such a unique opportunity in that where's all the value of these AI companies that are going to be built? It's going to be to the VCs or the early investors, and it just won't. Normal everyday people won't have the same opportunity and access to the asset.
I think Michael Saylor said it really well, which he said, really what you want to do is you want to find something that's going to be really big, that really has a really high chance of being really big, right? So it's kind of inevitable, right? And you want to get in when most people don't think it's going to be big. They're not completely convinced, okay? Now, the problem with AI is I think almost everybody on the planet is convinced that AI is going to be big, right? So it's like, if you're convinced that AI is going to be big, great, join the club. It's a big club. It's like, you know what I mean? There's a lot of people. And if you're doing a startup in AI, well, great. There's going to be 10,000 other startups in AI competing with you. And you're going to be competing with Google, Microsoft, Apple, Amazon, OpenAI, whatever, right? So the competition's going to be fierce. Everybody and their brother wants to be in AI. AI will totally change the world. I'm no doubt about that, right? But is it really a great opportunity for you to invest in AI companies? I don't know. Is NVIDIA overpriced relative to where it is now? Maybe, maybe it is, right? It's, we don't know. If you look at the PC revolution, right, when the PCs were really, really hot, and it was Dell versus Gateway, if you picked Gateway, you lost. They were about even, right? But if you picked Gateway, you lost. You picked Dell, you did well, up until a point. You don't see a lot of Dells anywhere, anytime. Dude, you're getting a Dell. You don't see that anymore, right? It's, dude, you're getting an Apple. You're getting an iMac. You know what I mean? So, who knows who's going to win these AI wars, or how all that stuff's going to play out in the next 10 years? I don't know. But I can tell you who's going to win the crypto wars. Pretty clear to me. It's going to be Bitcoin, right? Now, there's maybe be some other chains, Solana, Ethereum. There will be other chains, right? But, they're going to help Bitcoin. They're going to be transport layers for Bitcoin. They're going to help wrap Bitcoin. They're going to do other things. But the big thing, the big enchilada is what's the unit of money? What do we call money in the 21st century? And I think what we call money in the 21st century is Bitcoin. And so some people, somebody was on my feed saying, "Well, Fred, have you looked at Caspa?" And I'm like, "Okay, what's your give me the thing in one sentence." Why? They go, "Well, it's like better than Bitcoin. It has smart contracts. That's faster." And I'm like, "Okay, you can send Caspa from one person to another in 1 second, but it's not Bitcoin." I'm just like, so it doesn't mean just because you're faster, just because you're cheaper, doesn't mean that everybody's going to treat you as the store of value, the global store of value. It doesn't, it's like, okay. So it's not Bitcoin. So there's only one Bitcoin right now, and the winner's been picked. It's going to be Bitcoin for a whole host of reasons. It's first, but also it's the most decentralized. It's the most fair. All these different things. Hello?
Oh, yep. Can you hear me?
Oh, okay. Sorry. Yeah. No.
No, you're all good.
Okay. Yeah. So there's, those are some of the reasons why you're going to pick Bitcoin, and I just don't see anybody competing with Bitcoin at this stage. This is my gut feel.
Fantastic. And I do want to just be mindful of your time. I have two final questions. Do you need to go, or do you have time for them?
Yeah, I'll take the two. Yeah. Go ahead.
Take the two. Okay, cool. The first one is, it's touching on Bitcoin being the winner, but in the last 2 weeks, unexpected to everyone, we did see Ethereum, the ETFs get approved. Michael Saylor says he's changed his tune on it a little bit, and he thinks it's a rising tide lifts all boats. Do you agree with that, or do you think it kind of diverts not only the inflows, but the attention away from Bitcoin, and they're going to sort of be competing with each other? Or do you think it's a rising tide?
Yeah, no, listen, I was sort of hoping this Ethereum ETF didn't get approved because I think it would have simplified things. I actually don't think it's going to make a difference that it's approved. I think it's going to get some flow, but it's not going to be meaningful. It's I think people on Wall Street want Bitcoin. They don't want Ethereum. They don't understand Ethereum. You can't summarize Ethereum in one sentence. Like, Bitcoin is 21 million coins. The first is the biggest. Great. It's decentralized money. Okay, I get it. Ethereum, smart contracts competing with Solana, Avalanche, Near, all these things. It's a mouthful, right? So I don't think Ethereum. I think they're going to do okay. It's fine. They're not going to there's not going to be a flippening. There will not be a flippening. So, I don't think we have anything to fear from Ethereum. So, I don't think it matters. And I really like the way Saylor's, kind of transitioned or pivoted on this. I think that's I think it was very elegant of the way he did it, in a way that, he was sort of, there's only going to be one ETF, and now there's going to be multiple. But I think it's great. I mean, look, Saylor is one of my heroes, and I've sort of, at times probably been a little too tough on MicroStrategy initially, or something, saying it's a little overvalued. Like, I love Saylor. I think he's done a tremendous amount of great for Bitcoin, and not a lot of people have done more for Bitcoin than him recently. You know what I mean? So I'm appreciative of Saylor, and so I don't think Ethereum's going to be, but I have to stop myself too, because I have a tendency to kind of want to, just rail on Ethereum and stuff, but I need to stop myself. It's like, I don't need to do that. We should be better than that as Bitcoin. We should be gracious winners, right? Because we've already won. It's like, it's sort of like treating people as peasants or something, it's like, no, if you're kind of like, if you're the winner, you should be around, top of the morning to you, It doesn't matter, the guys, we should be gracious, and we should be better citizens than that. I hope we can be that, and I hope I can. So,
no, fair enough. Very well said. And Saylor's done so much for the community, and I see you sort of following in his footsteps. I like your analogy earlier that you're Paul the Apostle, telling everyone, and you're doing a lot for the space. So I really appreciate that. Fred, I just have one final question for you. It's a little bit different, but along the same lines. You've had a lot of success in your life in both being an entrepreneur and in investing. I wanted to ask you if you could give some entrepreneurial or investing advice to a 25 or 30-year-old Fred in the year 2024, what would you tell them to help them succeed?
I would say to go all in on artificial intelligence. The the most significant thing that is going to impact the next century is going to be artificial intelligence. And what I would say your best bet is, if you're, somebody under 30, it's a 25-year-old, perfect, right? I think your best bet right now actually would be to hook up with, get a job at something like OpenAI. That would be my number one recommendation. Because I was thinking about that in the past. I was like, why did I succeed? Well, I think part of it was because I went to Salomon Brothers, right? Because Wall Street in, 1986 was kind of the heart of kind of where things were done. But you know where it is now? And then I was kind of in the right place at the right time with like tech in the 80s, right? And, and the tech in the early 90s, 2000, right? Right around the 99 when the internet really hit, right? I think right now we are going to be in the next couple decades, it's going to be all about AI. That's where it's going to be. And what you really want to do, I would say, as a young person, is don't try to figure it out on your own. What you really want is you want to join a great organization, right? You want to join OpenAI. You want to join Google, or you want to join Anthropic, or one of these great, AI machine learning companies. You want to get on the inside. You want to learn the tricks of the trade. Spend a couple of years there. Spend 2 to 5 years in one of those things. Then spin out and do your own thing. That's your best bet right now. That's what I would do as the new Fred. I would, the younger Fred 2.0. I would go 100% in AI. And I wouldn't even try to like make money in AI right now. I'd just try to learn as much as I could about how this thing, because I mean, look, none of us had any idea that this was even possible 18 months ago, right? That's when ChatGPT got released. And now it's coding for us, right? Now it's like doing your appointments. Like, where is this going to be in three years? I don't know. But like, this is the future. This is what you should do. I think Bitcoin is a very simple thing. You don't need to develop for it. It's already developed, Bitcoin is just a savings vehicle. You should save as much Bitcoin as you possibly can. And I think you should spend every other cycle trying to get as proficient in AI as possible and learning how to use and leverage AI as much as you can. Because I think that's the difference between you, if you really understand what AI can do, and you, if you're just completely outside of AI, it's going to be 10x, So